Okay, so there's gonna be a quick review from yesterday's price section, and I thought of dropping a thread on Discord, but I realized that some of the points that I would be wanting to share, right, with the fellow members or the fellow traders, don't get across or don't get easily shared or relayed via a screenshot. So I thought I could make a quick review, something like 5 minutes, and then I'll be out of here. So without wasting any time, there's what we had. We had a GBP USD trade yesterday, and if you recall, we had shared what we had shared this daily context, not daily, but the monthly context of what the monthly context of price on Discord. If you look at the date here, there's the 7th of November, which was on Tuesday, late night at Tuesday, and the anticipation was if we get a volatility injection, right, which is the news driver, the red folder news driver, then we might be looking forward lower prices. And let's just get into the monthly that we had shared. So the monthly we had price trading into previously trading into this monthly CB and then traded lower, creating another monthly CB, we trade into it, and there's our current price action. So we are coming from what internal range liquidity to external range here, and sell side liquidity residing here. And all this is given a confluence by what? By the dollar index, which is basically making the opposite of this, which is pretty much bullish on the monthly. So on the daily, there's what we had. We had price trading into that monthly fair value gap, which is the monthly CB, and then broke lower, creating what? Creating this daily CB. So I was looking at this daily CB yesterday, and I thought if we could get a reaction on it and reject it, right? If we get a reaction on the daily fair value gap and reject it, then we might target what? The previous daily low and eventually fill in this whole fair value gap here. So there's what resembles the filling the filling in of the fair value gap, the FFVG. So using what? Using the bias from the daily and the context and narrative from the monthly, we go into the lower time frames knowing that we're looking for what? We're looking for lower prices as long as we get what? Volatility injection. So right here on the hourly, what did we see? On the hourly, okay, prior to the hourly, before I get into the hourly, this Thursday, right? We have what? 8:30 news coming through, which is unemployment claims. And I'm not looking at Fed Chair Powell speech rather, because it's at 2 p.m. and it's very, very much unpredictable. So I don't want to be trading through this. I want to be out of the market before this comes into play. So as long as we get what? This volatility injection, then I'm content with taking a trade on this day. So now let's get into the nitty gritties of how we maneuvered around yesterday's price action. So there's the 1 hour time frame. We have that daily fair value gap right there, marked out in red. I think that's red. And this is delineating what? From this high to this low. That's our dealing range, right? So it's discount to premium. We have what? The midnight opening price for Thursday price action. So we open on Thursday, the power of three, right? Classic sell day. Will see what? London kill zone forming the high of the day. And then we get a retracement to a premium array on New York, so you can get what? An expansion to your draw on liquidity. Provided your draw on liquidity, listen to this part, provided your draw on liquidity is not met prior to New York, then you're most likely to get what? A retracement back into the premium of the range that has been created by London all the way to New York Open. You get a retracement, and then you can find opportunities to sell to reach your draw on liquidity now, right? So you can see why we wasn't paying much attention to this fair value gap and focused on this fair value gap and that inversion fair value gap level. So prior to all this, right, what do? We open at midnight right here at 12 midnight New York time, and then we rally higher. What are we doing? Look at this swing high and this swing high. These are relative equal highs, right? We are taking out stops prior to what? Prior to the news release at 8:30. So there's what? Order pairing. So we don't need to see what? Any more orders being paired on the 1 hour after this stop hunt is is pretty much validated when we break lower. So you need to understand the context here. Order pairing way before New York session, order pairing way at London session. There's 4 a.m. London, right? 4 a.m. London session. So we make the high of the day at what? London session. Where exactly are we making the high of the day? In the daily CB. And then we break lower, we come back into it. And once we get this retracement, right, we can now go into the lower time frame and start hunting for what? Opportunities. Now, right here is the 5 minutes, which is basically the time frame that I use for entries. So there's the London session price action, and there's our New York session price action. So you can see at 8:30, 8:30 is somewhere around here. We don't get what? We don't get the usual injection of volatility, and then we rally lower all of a sudden. So we get 880 making price to what? Propel higher, only for it to reach a short-term premium array on the 1 hour, and then we can sell off from that. So right here on the 1 hour, there's our inversion fair value gap level. So we get there, we make what? The intraday smart money reversal. There's nothing really. There's a long-term uh, a long-term high. We have a short-term high on the left side, short-term high on the right side. So this becomes what? Our low risk sell. We come back into it. This low risk sell is forming on what? This consequent encroachment of this week right there. You don't need to know that really. It's really not a thing. But for those who are pretty much consistent followers of ICT, then you'd know. So we come back into this area. We form what? The first leg of distribution right here on this swing high, right? We are distributing above what? We're distributing above the midnight opening price, and then you break lower, and I'm looking to enter what? On the second leg of distribution. And right here we have this two up close candles. That's your, oh, it's three, actually three up close candles. That's your order block. We come back, we break lower, we come back into that area. I'm looking to sell off this area, right? Or you can be using what? This inversion fair value gap. Look at it here. We have this inversion fair value gap. Extend it out on time. You might want to be selling that. Once we drop below it, we come back into it to look for, to use it as support, resistance rather, and then we break lower. And I'm not looking to take any more entries because look at the time. There's 12, right? We said our New York kill zone is between 8 a.m. and 12, and I'm not looking to take trades at New York lunch, which is 12 p.m., 12 noon rather. So right there we get our expansion after lunch to the downside, and then we deliver to our draw on liquidity. So there's how it looks like in terms of framing the risk. So we have a 7.3 pips risk, right? We are entering on that order block, the bearish order block, and our stop loss is literally on this first leg of distribution right here. You see the logic. And from this area, where are we targeting? We're targeting this relative equal loss. You can get your 1:2 right there. And we have the sell side liquidity pool and eventually that sell side liquidity pool. And you can see how we reach that area. So our target on the sell side liquidity pool would have been what? 29 pips, roughly 29 pips. And there's somewhere around 40 pips. So there's basically how you could have went on about it. And this is what you would have had, right? Selling short on that 1 hour fair value gap. Let me take you back to it. 1 hour fair value gap right there. That's one. You can see we have this inversion fair value gap. We have this up close candles forming what? An order block. We have this fair value gap. You can be using what? Consequent encroachment of that. It's all above what? The midnight opening price. So there's a classic sell day template. So there's what you'd have, and eventually price is just lingering around at what? At an area where it filled in that daily fair value gap. So with that being said, that's basically that. It's easy, right? It's very much easy. You have to keep it simple. You don't need to complicate nothing.